everybody, and welcome to another week of Let's Talk. I am your host, author Dre Lett. Thank you for joining me for another fun filled week where we inform, inspire, and motivate. We get you going, get you going, get you going during these tough times and beyond. So come on in the room and have a seat so we can let's talk. Every week, you guys can view my show as you see scrolling at the bottom on the Facebook page called Let's Talk with author Dre Lett. All pre recordings are also on YouTube after the show, and also you can view them anytime on Facebook. So, again, you can view them live and pre recorded on the Facebook page, Let's Talk with author Dre Lett, and you can watch them on YouTube. So excited you guys are here to join me for another fun filled week. Also, you can purchase my books. All the information is scrolling down there at the bottom. There you'll find a bio about me and a brief description about what each book is about. So you can watch them, or excuse me, you can log on to Amazon, or you can go to my website, which is also scrolling down at the bottom, detailproduct.net. So super excited, super excited. So, you guys, today is what I call Happy New Year Friday. In other words, it's called Happy New Year Friday, planning your New Year financials. I'm getting tongue tied today, y'all. I don't know what's going on. But basically, this Friday, we're going to continue on with still celebrating the new year, which I'm calling 2020. And we have a special guest. He'll be on a little later. He's a banker. His name is Christopher Banks. And he'll be here to talk with us and share with us some banking and financial tips to help you get your year lined up right. And so you can have a really good year financially, so you can start to save, right? And do some other things that you probably want to do as well. So he'll be on with us a little shortly. Okay, so I want to say hello to my live virtual audience. Looks like they are still coming on in the room. Hey, cuz, tuning in from Las Vegas, Nevada. Hey, Tori. Hey, girl. That's my girl from Detroit, Michigan. Hey, girl. How are you? Hubby is watching, one of the producers. Always, every week, faithfully. Thank you, babe. Love you. Mwah. So I know some more people are watching. They may be too scared to say anything, and that's fine. And just so you guys know, too, that you can view the show live and you can be part of the audience. You can ask questions, or, you can chime in and comment things of that nature. Or if you just want to watch like some of you are doing, it's okay. It's all good. I'm just glad you are here, where we inform, inspire, and motivate. So, you guys, just want to go over a couple quick things here. We got a special message coming in from one of our sponsors. So I'm going to play that while some of the folks are coming on in the room. So you guys can take a look at this while they are getting situated. They're probably getting their beverages and whatnot. Okay, so here we go. right, you guys, as you can see, that was a special from one of our sponsors. Okay, so the information is scrolling down there at the bottom, the information in terms of how to purchase my books. So thank you for watching that. Super excited about the books, working on the sequel that is coming. Super excited about that. So, all right, you guys, in hot topics. Yes, yes. In hot topics. I don't know if you guys have been watching the series the Women in the Movement. I think it comes on Thursday nights on ABC. Been watching that, and the first one they showed is about Mamie Till and the brutal murder of his son Emmett Till, and it just touched my heart so much. So I know it's hard to watch and relive those things for some people, but I picked up on some things that I didn't know before. But the Senate recently passed a bill to honor Emmett Till and his mother. Senator Cory Booker, one of the bill's sponsors, says his acknowledgement was long overdue. Emmett Till and his mother, Mamie Till Mobley, will finally receive the recognition they deserve. The Senate passed a bill that will award Till and his mother with a Congressional Gold Medal. The Associated Press reported this, in fact. Senators Cory Booker and Richard Burr both sponsored the bill to award the pair with the highest civilian honor because of the injustices they endured. Senator Booker started the highest. I'm getting tongue-tied tonight, y'all. Senator Booker stated the courage and activism demonstrated by Emmett's mother, Mamie Till Mobley, in displaying to the world the brutality endured by her son helped awaken the nation's conscience, forcing America to reckon with its failure to address racism and the glaring injustices that stems from such hatred. So, I'm just super glad that they finally get their roses. It's unfortunate that Mamie Till has passed on and she didn't receive them when she was alive, but we can definitely celebrate them by getting this honor. So, super, super happy for that. So, you guys, and positive news, okay, and hot topics. Guess what? I'm so excited about the Super Bowl this year. Oh my goodness. So they released the other day, one of the local news outlets basically said the Super Bowl is still a few weeks away, but you can start losing your minds for the halftime show now, quote unquote. The official trailer for the big event just dropped and it's awesome. Dr. Dre, yes, Dr. Dre, Eminem, Snoop Dogg, my girl Mary J. Blige, and Kendrick Lamar are set to share the stage on February 13th. I cannot wait. So it has so many people hyped up and excited. And the article goes on to say that Pepsi just added to the anticipation by releasing a nearly 4-minute Hollywood film style clip dubbed the official trailer, featuring the performance getting ready for the call and prepping to hit up the LA for the show. The video shows Eminem, Snoop, MJB, Kendrick, and Dre all leaving their daily lives to join forces outside of SoFi Stadium, with Dre moving all the pieces in a big game of chess. The visuals are nuts, according to this article, and it's as any indication as to how the real halftime show will go. We're in for a treat. So can we please fast forward a couple weeks? I cannot wait. It's going to be so lit. I think finally something for the mature adults, right? That can relate to the songs and all of that. So super, super, super excited about that. Let me check in with some more to see who else is joining in today. Virtual live. Hey, Sean, how are you, Sorora? See, she said it's going to be lit. Oh, yes, the birthday girl is on. Carla. Hey, Carla. Happy birthday to you. She is my skate sister. I love her to pieces. She's a loyal viewer, and she is like the skate mom in the skate community. She's always putting everybody's birthday out, and she's such a sweetie, such a warm spirit. So happy birthday to you, girl. Hope you enjoyed your day and your birthday weekend. So super excited to celebrate you. So, you guys, without further ado, let's go ahead and formally introduce my guest. Okay. So as I said, this is Friday. It's basically we're continuing on to celebrate the year 2020, and we're calling this the Planning Your New Year Friday, which basically means get your finances in order and get your savings going, you get some direction and so forth. So with that being said, Christopher Banks was born and raised in Newport News, Virginia. In his free time, he loves to roller skate and has been doing so for the last 40 years. He enjoys playing dominoes, spades, and bid whist. He loves spending time with his 4-year-old daughter, Tennille. Christopher is happily married and will celebrate 7 years of marriage this year on July 4th. Christopher is very comical and talkative and loves to entertain. Christopher has been in banking for over 20 years and loves to help people by giving them financial advice. So, without further ado, I'm going to introduce my guest, Mr. Christopher Banks. Hey, Christopher, how are you?
Hey, Dree. Hey, everybody out there. Let's talk. How's everybody doing on a Friday night?
You are
Friday
hyped
night,
up.
let's get paid. Somebody get paid. It's Financial Friday. Let's get paid. Let's get some people some moochie, some dough.
I know that's right. I know that's right. Well, thank you so much for coming on. Let's talk. I know we've been planning this for a while, and I'm so excited that you are here to share all of your wealth of knowledge and all that good stuff. So I'm just seeing all the hearts and the likes. They're so excited to have you on. So, Chris,
It's
tell
glad
me
to be
first
here.
off, before we get going, what exactly is your role at the bank so everybody can get a feel for your background?
Well, thank you for having me on here, Dree, and it's a pleasure to be in front of you and to be a good friend and to just be here to share some great information. So I started off in banking right out of high school as a teller, and I did that for pretty much 3 years, and then I went and got some additional experience because on the teller line the idea was that you don't get to do the same type of experience with sitting down with individuals face to face. So it wasn't the same type of experience. So they didn't want to set me up for failure. So I was able to, after becoming a teller, going out to get some other customer service experience. I was fortunate to work for companies such as Geico and Allstate. And then I was able to go to SunTrust and get my first introduction on the banker side of things. So my role currently is considered to be a personal banker. And in my 20 years of experience, I have been able to get to the ability to discuss things such as personal and business accounts, with being a business advocate to the main uh, primary business specialist that is in the bank. And then also, I have also been able to help as a senior banker when people go through a transitioning, also known as the word death, which I try not to use much, but I just use transitioning. But anytime they go through that, I'm their point of contact, as well as when it comes to um, trust and estate accounts. So those have been some of the focuses that I do because of my experience. So the overall title is personal banker, which deals with a lot of things. Unlike the term financial advisor, who deal more with the investment sides of things, which are not necessarily what is called FDIC insured, where there could lose value. So, but that is something that I do desire to do in my near future, because I do love helping people, and that's a desire that I do have, to help them on their retirements and dealing with stocks, bonds, and mutual funds in the near future. So that's an overview of the the whole financial aspect and what I do and what I look to accomplish in the near future.
Oh, wow. That's awesome. That is so awesome to
Yes,
hear
ma'am.
someone like yourself that have the passion that want to help people, and take your career further and beyond. So what are some of the tips that you would like to share with the audience in terms of banking, savings? I mean, with this being year 22, I'm sure some people are going to take some vacations, maybe out of the country, buy some cars,
Sure.
houses, so forth. Maybe just save. What are some of the tips that you'd like to share with the audience?
Sure. So, guys, I would encourage, if you don't already have pen and paper handy, you might want to get some things to jot down your notes if you are not the most um, uh, easily person able to save and store information. So I highly encourage that, or to have a notepad, or to have your phone ready to take notes in your messenger, or however you want to do it. I highly recommend it, because there will be some information that you may or may not heard of. I will give you heads up, and that's the plan, to really blow your minds with some of the things that you may witness and encounter tonight. And of course, you can go back and look at this again in the near future, in case you have to, in case you're driving or you don't have pen and paper. So share with me as I go through this journey with you. So one of the, and I'm looking at my notes, so I did prepare, guys. So forgive me, but I just want to make sure that I address the things that I had wrote down. So one of the things I encourage to do, um, family, is to create and have a budget. It is highly important to budget and look at what you have coming in, whether it's looked at a 2 week base or a monthly base, however you want to do that. Some people are paid once a month. A lot of people are paid biweekly, also known as semi-annually, or some people are fortunate to be paid weekly. So it's important to take what you have coming in and prioritize your main expenses, such as your house or rent payment, any debts that you have, such as credit card bills, car payments, those type of things. Make sure you have those planned out, and then your other important necessaries, such as any main things that you participate in, that you're a part of, that are regular ongoing expenses, especially things such as groceries, utility bills, etc. So make sure you have those things planned out. And then it's important to have what is, I call, an emergency fund for the things that may come up unexpectedly. And when you budget, you sometimes know how to prepare for those unexpected things. And I always tell my people, when talking to them at the bank or wherever I'm encouraging them and giving the financial advice, it's not it's not if, it's when these things occur. They're going to happen. It's just a matter of time, um, when they occur. And it doesn't mean that it's going to necessarily rain cats and dogs and cause a tornado or a tsunami to hit you, but it just may be something unexpected. So if you're used to budgeting and knowing that you have $1,500 to work with, and you, after all of your expenses, have $500 left over, if you know that something is coming up, or excuse me, if you have something that hits you, let's say that costs 750, and you know that you have only $500 to work with, it doesn't take rocket scientists to know that there's a negative there. If you only have 500 and 750 comes up, there's a negative 250 there based on those numbers. However, if you're budgeting and saving with that emergency fund, those things add up and cause you to be like, okay, I have something to plan and put in together, should and if that does occur. So keep that in mind for the emergency fund. and whatever that may be. It may be extracurricular activities such as skating. It might be, you know, you're wanting to do something that you really love, as far as a program, anything where you are in that you desire, but it may not be necessarily to have. You could easily, if you had to step back because of an emergency situation, you could possibly fall back and say, hey, I can't participate in this no more. It's just an extracurricular activity that I'm trying to do because I have the extra means necessary to do so. That's what you put for your emergency fund. Versus when you're budgeting, you have those things that you can't stray away. You have to pay the mortgage. You have to pay that rent. You have to pay that car payment, or they're going to come and get you. And hopefully you ain't trying to hide it from Uncle Bobo or Uncle Jojo. And some of us are guilty of doing that. They be like, they won't come and get and take my car. Not today. No, they won't. They good luck at finding it. So we just don't want to make sure we give them that opportunity, guys. I got a question to ask you, and hopefully I can see this, or Dree, you can get responses, and everybody just shoot your answers, and we can see what the majority of everybody is saying. So first question, um, uh, Lord, I can't read my own, um, I can't even read my own hand right here. Stop playing, Chris. Paying your utility bills late can affect your credit score. True or false? Try to throw your answers
Okay.
out quickly, guys, so we can keep moving.
Yeah,
So,
y'all put them
so
in the
respond
comments and
quickly.
I'll read them.
Put them in the comments real quick. True or false? One is you ain't got five answers to choose from. It's just a T or a F. so
Somebody
so
said
again,
true.
paying your utility bills late can affect your credit score.
That was
Absolutely.
true.
Those who said true, it does absolutely affect your credit score. Now let's ask the next question. True or false? Paying your utility bills can help build credit. True
Mm,
or false?
okay, let's see.
Should I sing the Jeopardy music? Doom, 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 doom. House music. Get work with it. Get funky with it. I'm trying to make y'all laugh, but be serious at the right times, guys. I'm a
Uh-oh,
comic.
somebody said false. I got a false coming in. Is there any more answers, you guys? Okay, I got a false and a true and a false. Uh-oh.
Uh-oh, we're getting different answers. So, and see, this is the thing. This is one of those things that I told you some people might be interesting to find out. Now, the in that the and I see where some of the comments people are, I see why you might say what you say, but really the answer is actually really false. The
Mm,
way to increase or building your credit is actually to to use credit. That's the way that it
mm,
happens. That's the truth be told to it. So it's just like the idea of when people have had utility bills at an early age, maybe 17 or 18, they've had those things in place, but yet when they go and look to see where their credit is, it ends up saying zero or not reported. And that's because, okay, they didn't have a credit card or anything in place there. So it is important, for if you need credit, the way for that to happen is to use credit. So let me ask another question here that I'd like you guys to think. Being an authorized user on a credit card, is that really causing you to gain credit? True or false? Or
okay.
yes or no, I should say.
And while we wait on the answers to come in, somebody had asked the question that you just addressed. They said their son
Okay.
has a zero credit score and they're trying to buy a car, and you answered it. Okay,
And
here's
I
somebody.
and I will address the youthful credit situation that is coming up
Okay,
in,
okay,
in my next point. hmm
okay. So we got a yes, a no, and a false, and somebody they're not sure.
Okay, gotcha. So we got a couple of things. So the actual thing on there is, because unless you are considered a co-signer or a co-borrower on that joint credit card, the authorized user is really not making a difference in credit. That's one of those myths or things that people sometimes, they're like, oh, if I don't have any credit, I'll just go be an authorized user on my wife or my husband's or my mama or daddy's account. It's really not going to make your difference. So it's all about you being an actual owner, where they run your credit, where they make sure that you can be a part of that. So it's important for that to happen. That leads me into to the next point that was just brought up about youthful drivers, or excuse me, youthful people looking to get credit. You will be amazed at the people that I come in when teenagers come in to open accounts, and most of the time they're with their parents. And I sit here and I tell the parents, I was like, your son or daughter is going to college. I highly encourage, with the checking account or savings account that we open today, that we open up a credit card. And you'd be amazed at the people who just are like, I really don't want that to happen. And they were like, I don't want my son or daughter to go and run up and get the bill to something ridiculous and they can't manage it. And I definitely respect and honor people who feel that way. But there's a but and there's a however in reference to what I want to make known to customers and the audience that I'm speaking to this evening. The thing about it is, when a student is able to show that they have gotten into college and had the grades or the discipline to make sure that this happens, they have a very high chance at getting approved for a credit card. And keep in mind, the financial institutions aren't dumb, whether it's a credit union or a bank. They're going to make sure that when these kids get these limits, they're not giving them a five or $10,000 credit card. They're giving them 500 or 1,000 in most cases. And the way that I present this to the customers, the mom and the child, a lot of times if they're together, and just the child if they're by themselves, I'll say, hey, what you do with this is, when you are responsible for your tuition, your books, your meals at school, all you need to do is go and take what you would normally pay in cash or with your debit card and just use that on your credit card. And another myth that people think when building and establishing credit, you do not need to go and make a $2,500 purchase or go and charge 50 transactions to build and establish credit. All you need to look at doing is, it's all about paying your bill and paying it on time and showing that the usage is being made. So what you do, three to five transactions. You do that a month. You go to McDonald's. You go to the cafe or the bookstore that's located in your school. You pay that, um, charge it, and then pay it off after the statement has issued. I tell people, you don't want to sit there and pay it off too early, because if you pay it off too early, it doesn't give it enough time to register to show that you put that up there to pay it off. And people are like, oh, that makes sense. They're like, because there's nothing wrong with paying it early. But I always encourage at least to give it some time to make sure that the statement is came to say, hey, you spent a total of $18, you paid that bill off. And of course, whatever you charge that month, if you pay that bill off in full, the bank is not going to get any interest from you. The way that the interest earns is if you pay the minimum payment, and anything that is um, less than the minimum, than the full amount that you charge, that is what the interest happens on, and that's how the banks make money. If you pay that bill off in full, then you don't have to worry about paying an extra cent, but you're still building credit and you're setting yourself up. The problem that people have, and what I asked them is, they were like, I don't need to have a credit card right now. I can do that later. So of course I have a plan when I ask this next question to people, and it's a setup, even though they don't know it. So what I'll ask a customer or the child that's in front of me, I'll be like, sir or ma'am, I understand that you said you don't feel that you need this right now. Can I ask you when in mind that you have an idea that you want to purchase your car? And guys, if you don't already know where I'm going with this, the answer that most people are going to say a lot of times are usually probably in about a year, maybe 2 years. And that's exactly what I expect them to say. And I just sit there and I just smile and grin at them like the Grinch who stole Christmas. I just grin at them and I say, let me ask you a question. I said, if you plan on purchasing a car in the next 1 or 2 years, when do you think you're going to start building credit for it to make a difference and for somebody to see where you started? And then you just kind of get like the deer in the headlights look, like, uh-oh, uh, oh, and it's like that aha, I got you moment. Like, yeah, you need to start now
Mm.
because you need to give it time. You can't just be looking for a car and say, "Oh, I plan on shopping for a car in July," and think that you're going to start building credit in February. No, 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 no. You need to take a good 6 months to a year to get that credit rolling and to get that ball running so that they can see where you are and where you've come from. So that's so highly important. So that's what I say to the kids, because what happens is if you wait to get out of college and if you haven't built credit, several things that's going to happen. You're either going to need a down payment that's ridiculously large, and or you're going to need a cosigner. And these days, parents, they scared of you young folks if you are watching, because you got your peers in there telling you, go do what you want, go, go get it, go do this, go do that. And sometimes you may not make the best responsible choices. So it's statistics show it, and sometimes that's what's going to happen. Sometimes it's a lesson learned, but the idea is to give you that advice to say, don't go be the statistic. Pay attention to somebody who's trying to tell you, hey, that stove is hot, don't touch it, it's going to burn you. And then some people just believe that and say, I see that red hot stove, I ain't getting burned. And some people be like, it's not that hot, and you go
Mhm.
touch it and you get burned. So keep that in mind, guys, there, in reference to setting that up, because you don't want to have to sit there. And another point that I know I've written down, but I'll go ahead and address it. The the, the credit is the one of only, if not the only, and y'all may have never heard this before, because a lot of times I don't hear people saying it, but I'm unique, and that's what makes me different. Um, but and I love it. But one of the things that I use a lot is credit is one of the only, if not the only things that people can get away legally discriminating and getting away with it.
Oh,
Look, Dree, I saw the face. I love it. I can't see
yeah.
everybody else's face, but I just
Mm.
saw Dree, and I love things like this. That excites me when I see somebody's face be like, I've never heard that, or
No.
I've never seen that presented, but it's truth. And,
Mm.
and and let me give you a prime example, guys. Let's say a 18-year-old goes in to buy a car, and they go in with their best friend who's another 18-year-old. One of the 18-year-olds let's change the years. Let's change to 20 years old. Two 20-year-olds go in. One of the 20-year-olds built credit when they were in the college and went and showed that they have had credit built. The other 20-year-old never had any credit. They go in with the desire to get the same car, the same exact car. And when they go and run things, the person in the finance department comes back and says, hey, person with the credit established, you want a 2020 you know Honda CRV. That car normally costs $30,000. We just using general figures. $30,000. Your payment after running the numbers, I need you to have a I can do this with a $300 down payment, and your monthly payments will be $240 per month for the next 5 years.
Mm.
Everybody looks at it, they're like, okay, I'm good with that. I can make that happen. Same scenario. 20-year-old, no credit, runs the same numbers. The financial representative in the bank for the car dealership comes back and says, um, so what we need to make this happen, I'm going to need a $1,500 down payment. I'm going to need a co-signer. And if we get the co-signer to do this, oh, I forgot to leave out. The first person, they say your interest rate is going to be, we can get you approved for 2.99% annual percentage rate for the year. And then on the second one, same stuff, $1,500 down payment, need a co-signer, and your payments per month will be $465 a month. And you be like, what? Hold
Mm.
up. That's we the same age. However, the difference is that 18-year-old, that 20-year-old with the credit established started early versus the other one didn't. And now that's why the bank can say the same exact car. And we could have even looked at it as an older model car or things. It doesn't matter. Um, new or old, the same things apply. So that is why I use the term, you could actually say we are not going to be able to do this. And in most cases, if you tried to go into Burger King and the person in front of you ordered the Whopper for $3, and the person behind them say, oh, we need to charge you 750. Excuse me,
Mm.
no, you can't do that. And
Ooh.
if they ever tried to pull that, it'd be a lawsuit, and you'd be
Mm-hmm.
sitting on top of a gold mine, as Fred Sanford said back in Sanford Sun days. You'd be sitting on top of a
Mm-hmm.
gold mine if they tried to pull that. But in the credit world, they can do things like that. So
Right.
and I'll move on. The next thing is a scenario that is important even for established people. Like, say for instance, a 50-year-old customer, they're debt free. They have $50,000 in cash in the bank, and the last time they had any active credit was 3 to 5 years ago. And let's say their house needs several things done coming up that cost approximately 25,000. Would it be smart to use the savings that they have stored up at the $50,000, or do you think that it would be good to use the credit? I'll
Mm.
go ahead and answer the question for the sake of time. Yes, the person could use the savings in the account, but the way that I always tell my customers, and I'm explaining to you guys here on the social media platform, a lot of times when it rains, it pours, guys. If the water heater goes out, then the washer and dryer goes out, and then the
Mm-hmm.
refrigerator goes out, and the microwave, and etc. So when it rains, it pours, and a lot of things come in multiples of threes, or
Yes.
maybe twos or threes. So what happens if you go and and you exhaust everything in the savings, and then other things happen. You either don't take care of it, or you just deal with what you have, or you have to look to a means of borrowing, or asking, or of course, we're grown, we know the options that we have, but those are some of the things that you run into. And the problem that many people face is, if they go, and it's great, I commend people who are debt free and everything, and that's an awesome thing, and an awesome accomplishment. However, the thing that I tell people about, when everything is paid for, I say you want to have some active mean of credit still going on. And the reason for that is, what happens is, let's say you go in that same scenario and you get to a point and you're like, I need a $10,000 loan to cover my expenses for the other things that happen. When the bank goes to review your credit, they see that you, yes, had credit in the past, but because the economy has changed in the last 3 to 5 years, and more than likely, to be honest, guys, it's going to continue yet changing with economics. The things are going to go up. They're going to, typically, food is unlikely that milk is going to go back to $1.99.
Yeah.
It's gonna be like going up. If we be just truthful and real with ourselves, that is
Yeah.
what's gonna happen. So you have to make sure that, because, back to what I was saying, the banks are gonna say, I saw that you manage credit, but we don't know what you can do now.
Mm.
We don't know if you can handle or maintain that. So that's important, to make sure, why, to at least have a small active account. It doesn't have to be anything large, but just show that it's being active. As I said earlier, I reiterate, it's not about you going and making a $250 purchase or a $25,000 purchase on that credit card. You can make $5, $10, $2. It's important. The bank wants to see the payment was made on time, that it was active, and it's going on. That's what makes the credit. They're not looking to see that it was $2,000 charged that month. No, it's the fact that it was done on time and that it was used. Um, I'll keep moving on.
This is good stuff. You guys make
Uh,
sure you fill in your questions, because when he's done, he's going to take questions. So a lot of
sure.
comments. This is good, Chris.
And I do apologize. I'm trying to stay focused. So, guys,
No,
I
this is
haven't
good
even been able to
stuff.
look at the comments. So, I'm hoping that this is helping somebody. I really do.
Yes, it
Um,
is.
so, guys, just to let you know, some of you who are out there who are homeowners, I want to mention something to you. There's a product in the bank that's known as a home equity line or equity loan of credit. What that is, it's a loan or a line of credit that that is used based on the equity that's in your home. Equity is considered, basically, in simple terms, and I'll use an example. If you if your house is valued, and I'm going to do this because I ain't trying to do hard math. It's late, and also I just been feeling good and just relaxing and everything. I don't want to do any. I don't want to get my mind going blown. But anyways, let's say you have a house that's worth $500,000. If you owe $200,000 on that house, 500 minus 200 leaves 300,000. That $300,000 means that you have $300,000 worth of equity, with the value of your home at $500,000. That doesn't change, but it's what's owed and what you have available. One of the things that people can do is use the equity in their house to work for them if they ever needed to do a loan against it. Um, this is a great benefit, because equity lines slash equity loans are usually the lowest interest rates available to when it comes to the interest rates. Also, it can many times not, and because of the way that things are in with with politics and everything. It used to be in a moment time that it could be used as a tax write-off. Things have kind of changed in the world, and that may not be going on, but it may be coming back. My recommendation is to talk to a tax advisor about that. But the other thing is, um, it can be used for almost anything. If anybody who's been in the the just the world, and I'm getting tongue twisted, but just if you've just been living, not trying to exclude you young people, but this part is more for the wiser people. Not, I don't like to use the word old, but the wiser people, who are fortunate to be homeowners. And sometimes homeowners are now in their 20s. So I mean, people just could just have it like that, or they could have had an investment or a windfall, or they could have just started a doctor or a lawyer, or dentist or something in the medical field, or an engineer, where they just get it and they can do that early. And claps to them for whoever are able to do that.
Mhm.
But the great thing about these things that I like, guys, is that um, it can be used for almost anything. Unlike if you go into getting a loan, you might say, I need an auto loan, or I want to purchase a boat, or I want to purchase, or I need a home loan, or I need, to do a debt consolidation loan. There are specific questions that have to be tailored to each of those things. And the difference with the equity line is you don't really have to give a reason for why you need that. Now, the truth be told, equity lines are not supposed to be used for business purposes. Do people do it? Yes. But it's not really supposed to be done for that. But pretty much they can be used for anything. Now, one of the reasons that I really, really like equity lines purposes is for this reason I'm about to give. If, let's say, for instance, if you have an equity line in place, and let's say you have $100,000 of equity, and you go and you tell the bank, let's have a $25,000 limit in case something comes up. The thing that I like about those things, if something happens, you can just go into the bank, tell them I need this, and it's done. You don't have to
Mm,
go in and wait for underwriting. You don't have to go in and wait for an approval. And
mm,
if this thing has already been in place, if something came out with a change in your credit, it's already in place where they don't have to go and rerun it. So those are
wow.
several things that I like. But one of the things that I really like, guys, that, and this is another thing that some people may be like, uh-oh, I haven't heard this one. Let's say something happens where, let's say there's a two-person income, and between the two people, the spouses, let's say they make, and we'll keep simple terms again, let's say their income is $200,000, and let's say that one of the spouses, their income changes because they got laid off or fired. If you go into the bank and say, I need a loan for, $30,000 to take care of an expense that has came up, and you just witness, and you just know that, you know, there's a change in income, and now you need to take care of something. You can't go into the bank and tell the loan officer, well, 2 weeks ago, the income used to be $200,000, but because my spouse just got laid off, our income is now 75,000. The income that's going to be used and evaluated is now the current income, not what you used to have. However, in the example of the equity line, if you already have that $25,000 in place, the bank can't use it against you to say
Oh,
that,
wow.
oh, because your spouse is not is no longer employed, you can't borrow this money. So
Wow.
it's like, what, right? So now you can take care of the needs that you have and slowly pay that back until you get back on your feet. And hopefully the idea is that the spouse finds another job, and then y'all now both have the income like it used to be or even better. So
Mm,
so that's a thing there. A few more points and then I'll be wrapping it up and take questions. Anybody out there who is looking for going into business or current business owners, several things that I want to leave with you in reference to this. It is important to make sure that when creating a business, do your research. Um, it is not it is not encouraged from bankers, even though they do it. I'll be honest. Um, because bankers are typically not considered tax advisors, they have to be careful about what they say and recommend. But it's important for business owners to know the difference of what type of business entity they're going to have. What I mean by entity is whether they're considered a sole proprietor, where they're usually the only person who owns the business, and they're using their social security number, or they could be using a tax ID number for that, but it's not required. Then there may be a partnership or or I'm running a partnership, and the other thing that you hear of is an LLC. So
yeah.
it's important to know why somebody may say, "Oh, it's easy to become and just do a sole proprietorship," but you might need to research what happens if something legally goes wrong. You want to be in a position where you understand, can they come after my business? Can they come
Mm,
after my personal stuff? And a lot of times, if you have a certain business, they can only go after so much. It's not where they can come necessarily after your personal assets or the business or something. There's a limitation. So it's important to do your research, and why you may say, I'm creating an LLC versus a sole proprietorship. So that is something to make sure you do your research, guys. Now, I'm not telling you to who to necessarily choose, but I will tell you that under Wells Fargo, there's a website that's called wellsfargoworks.com. It goes over free information, how to create a business plan. It gives videos of people who have been in business, of things that have worked and what have not worked. Now,
mm,
don't get me wrong, everything is not going to necessarily work. I mean, what works for one may not work for the other, and then what didn't work for one could work for the other. Don't get me wrong,
mm,
but when it comes to business, there are common things that is going to happen that is kind of universal, that those people are saying, hey, you want to get this done. So make sure, just go and look at that and take the information. If you're not fond of wanting to go through and use them, you don't have to. But the information on there is stuff that many places charge money to get that
mm,
information. And so I would highly, again, tell you to look at wellsfargoworks.com, and they can give you those testimonials, different things and all of that stuff. Another thing that I want to make sure I address, um, is business credit. If you're a business owner, it is important to separate your business from your personal. And one of the reasons that I say that, a situation that many people get um, into, and they don't understand why they get denied. When it comes to credit, there's a term that is known as debt to income. The bank is looking at the amount that you are making per year and the amount of debt that you have. Debt considered things such as credit cards, your home loans, auto loans, those type of things, anything on credit. And then it's also taken into consideration things such as like utility bills and things that may be general things that most people are commonly taken care of in their normal regular day needs. Some people may need daycare, some people may not if they don't have kids. So there's different things that come to mind. If one person doesn't have this, they may have that. So that's why that 20% typically is used and added. And that's why the bank doesn't always lend 100% because they're taking into consideration of those other things that may come in to place. But one mistake that sometimes people don't realize is if they are a business owner, they'll go and try to get a credit card under their personal account and use it for the business. And because they have so much debt out there, the banks won't approve it because of the debt to income. Had they gone and built the credit card under their business, it's a separate entity. And that's
Mhm.
how they can be approved. So whether it's if a business is needing a line of credit, because like say for instance, if they're a lawn care business, a problem that sometimes people don't realize is even though a lawn care business is doing their business primarily in the summer and the spring, it doesn't mean that the business is not operating and still needing to go forth and have people investigating and working and getting prepared for the spring and summer months coming when the fall and winter is there. Payroll still needs to happen. Those things need to happen. But if income is not coming in and you haven't saved accordingly, that is why the business credit and the lines of credits can help that business
Mhm.
for those down times. So that is why another reason credit is beneficial and helpful. And the and to build and start credit, there is what is known as a secured credit card. That is where you put up your own money, and if you've never built credit or you had credit and now you need to fix it, that is the way that you go. Now I'll tell you, usually there's an annual fee that's involved with most institutions that do that, and the interest rates are unattractive. But
Mhm.
if you have the mindset to go in, if they tell you it's going to be 23%, if you're not planning on carrying a balance, then you won't be paying that 23% in
Wow.
interest.
Mhm.
So I
Yeah.
tell people, if you're trying to restore your credit, the idea is not to go and try to get a balance and just keep that going. You don't want to, this is not the time to go and hope that you keep getting a credit increase and then now your credit then got up to $8,000 and you're only able to make the $100 payment there each month, and then now that's affecting you over time. That's
Mhm.
not what you want to do. Your accomplishment is taking a small amount of money, putting that aside, using that as your secured credit, and you're telling the bank, hey, if I go and charge $500 and I put $500 down, if I go and spend all of that money and never pay you, you already have my money secured and you can take it and get it on your end. Now, guys, I tell you, if you're at a point where you're serious and wanting to change and get your credit in place, that's not the attitude that you want to have. You don't want to go out there looking to say that I'm going to mess this up. Because if a bank or institution looks and sees that you had a secured card and wasn't able to manage it, they're going to say, how do you expect us to give you free money and think that you're going to manage it? So,
Mhm.
you know, you just don't want your good to be evenly spoken of, as the good book says. So um, that is my time. I know I shared so much, and I just felt the
Wow.
energy of sharing, and I just love the energy that Dree was showing just from her face alone. So it just caused me to get excited, and I was just I was in a flow mode, So I don't know how this is going to
Listen.
look. I don't know how this is going to look when it's aired and everything, but I just did me. I just shared me. I have a passion to do this, and that's why I've been doing
Mhm.
it for so long, and I just enjoy it. So guys, thank
There's
you for having me. I'm going to turn it
yes.
back over to Dree and allow questions if possible. And of course, the information is going to be available in case you want to reach out to me and ask any further questions or give any feedback. I welcome it.
Mhm.
Hopefully, I didn't
Mhm.
make any wrong notations.
Oh,
I
good
usually ask for
information.
feedback. And
Good
I'm very
information.
honored to talk to you and make you aware of these things. And I'm just ever so grateful. So I honor Miss Dree
Aw.
for this opportunity, and I'm just excited about what she's doing and helping people change the way they see their finances and make 22 a great and smart one. And people fail for the lack of knowledge, and I'm here to share and to change those aspects. And hopefully, something was said or done tonight to encourage you, to cause you to look into matters, to make the right decisions, to be smart about saving, building credit, helping your children, and making a difference. Also, another point, real quick, I just thought about it. Life
Mhm.
insurance, it's important. Don't expect a GoFundMe. Our people
Mm.
expect on that. Find Get life insurance. I didn't focus on my medical condition tonight because I wanted to focus on the aspect of the financial part, but I'm in a situation that I can't even get life insurance at 44 years old based on what I've experienced. I never saw myself having to cross this bridge, and I'm praying that the man upstairs will cover me and everything. But in most cases, you just don't want to be in that position. So you can talk to me about that. I have information on that. I am a life insurance agent, so I can talk to you about that, and we can do a segment on this later in the future. But it is highly important to take advantage of that and just make sure that you and your families are covered, especially if you have any pre-existing conditions. The great thing I love about covering your children is you can get them insured, and even if something happens to them in the near future, if you start early, if they get any of those things that happen, because me and my wife have pre-existing conditions, and that's why when I found out about this, I jumped on it immediately, so that I know if my child gets anything on either of our ends, she can't be denied. And as long as she pays her premium and keeps that going, she can add every 5 years $25,000 to that and be covered. And no matter what happens, she will get the best rate as a normal person in that age group in the highest and best status. It can't be used against you. That's a term known as guaranteed insurability. So that is the great thing about setting insurance up for your children, especially if you have any conditions such as diabetes, any heart situations, cancer, kidney dialysis. Those are things that usually insurance companies will not write and cover you against. So if any of those run in your family, you want to, like yesterday, get on top of getting them insured. And it can be very inexpensive to cover your children. So that's my time.
Absolutely.
And thank you.
Absolutely. This is awesome. And Chris, your passion shows through you, and you're a wealth of knowledge. And I'm so glad that you come on because we don't always hear these things so candid and open and honest. So there were a couple questions. Somebody said, my son pays his rent on time, but it's not showing up on his credit. What's going on with that?
Well, the thing about the rent is that's not considered even though there's a difference in renting and home ownership. With the home ownership, you own the home. With the rent, it's just rent. So it's not, even though it's your place, it's not your place. You If something goes wrong, your landlord is in charge of fixing that, versus when you're a homeowner, you're responsible for fixing up your own home. So that's why I if I'm not, I could be wrong, but from what I understand, the rent is not going to affect the credit as far as building credit. As I had said earlier, it would affect it negatively if they did not pay their rent on time. It would sure make their credit score go down. But when it comes to a rent payment, if it does have any impact, it's not a big impact. It's not enough for the financial institutions to be like, oh, you paid your rent. This is a reason for us to give you a credit. The credit card companies, the banks and everything, they want to see what you've done as far as with actual credit cards, auto loans, those type of things. To, as far as what I know.
Okay, awesome, awesome. And somebody gave me this question to ask you before the show. They're not able to be on live, but they'll watch it later. They wanted to know, what is the difference between leasing and finance? Do they look at it the same in terms of credit scores and all of that? Is a lease easier to get, or is it better to go and finance a car?
Um, I I'm not going to say, Dree, that I have a wealth of knowledge in this when it comes to um, the leasing and the financing. Pretty much because I've never leased a car. My understanding is that people are responsible for paying an amount and from my understanding, the way that I look at it, people lease a car if they regularly plan on switching out the cars versus keeping it for a long time. Because my understanding is when you lease a car, you have a certain amount of payments to do at a specific amount, and then later on, you have a full lump sum that's due, and you either have to pay that amount or either trade in that car and start a new lease. So to me, it kind of reminds me of this plan that the cell phones used to have, and I don't know if they still have it, but T-Mobile and Sprint used to have this plan that you can get a new phone every year. You just pay the amount, and you really don't pay for the phone and buy it out. You just restart the contract over for the amount of the phone. So the reason why the cell phone companies would do that, because they know it's a very unlikely idea that you'll leave them because you're never paying off the phone.
Mhm,
You always just have that reoccurring, okay, I got a new phone. The value of that phone is $1,800. You pay that $33 plus the value of the phone, but you know once it comes time for that year, you still might have a balance of $800 left on it, and then you have to either pay that off to get out of it, or either get a new phone, and then that just starts it all over again. So, but yeah, I really don't know if there's a lot, if there's any difference, because still you're required to make those payments, and they may look at it a little, if anything, they may look at it a little harder, knowing that they don't want somebody to get in a position and say, oh, you
mhm,
you need to pay $3,000 to pay this car off, and we expect this payment when you were used to paying $200 or $300, and then the person can't do it, and then they end up having to repossess it, and then that goes on their report. So
mhm.
that's what I think when it comes to that. Don't Unfortunately, I don't want to say hold me to that, but that's the way that I look at it. I don't know if anybody else um, watching has any thoughts of saying so, or saying that they've heard anything like that,
Mhm.
to agree with
Somebody
me.
said
But
they said they leased cars and it's harder to qualify to lease, but it seems
yes,
the way that
Diana.
you say.
Yes, yes, yes,
Mhm,
yes.
mhm. Definitely. So definitely they're just praising you, Christopher. You've definitely got to come back and go over the insurance, and I might just have to make you our resident financial person for the show, because you gave
Oh,
so much
bless
information.
you. And and
So
and, and
much.
guys, I mean, I get excited and I get hyped, and it's so funny because one of the bankers, and I never changed this on my account, but the title of one of my checking accounts with the bank is called Spending 2.5. And some people will
Mm.
ask, because you see some people who name their accounts, they'll be like my checking, my savings, mad money, different names that people have. And sometimes, the bank tellers and employees will look at the account and they'll be like, spending 2.5. Can what That's interesting. I've never seen anything. How did that happen? And I was like, do you really want to know the answer to that? And they're like, yeah. And I say, well, one of the bankers that I used to work with in Virginia, they opened up my account, and when they nicknamed the account for me, they named it spending 2.5. And the reason that they did it is because they're like, Chris will spend 2.5 hours with his customers when everybody else is taking 25 or 30 minutes. They were like, we got to line out the door, Chris. We can't spend 2.5 hours with everybody. You got to pick and choose, boy. But and I have still to this day, after 10 years probably, I've not changed my account to I've left it. I was like, I could have changed it, but I was like, I'll just leave the spending 2.5. But I do have a true passionate. Yes, I
Yeah.
love to tell jokes, but I get real serious when it comes to stuff. And it's I mean, I'm not gonna lie to you, Jury. I've had customers who have said, I have learned from you more in 20 and 30 minutes than I have in years. And I tell people, I was like, I don't want somebody to come to me, I don't want somebody to come to me making it think like they're going to the DMV. Everybody was like,
Mhm.
oh my gosh, if I got to go to the DMV, I have to
Right.
spend 2 hours. It's gonna be the worst thing since
Yep.
Hitler, you know,
Right.
or another person that we used to have in office. I won't mention no
Yes.
names. It starts with a T, ends with a P. But anyways, no, I'm just like, I'm sorry,
Right.
I shouldn't have did
No,
that.
no,
Forgive
you
me,
get no,
forgive
you
me.
get
But it's. I mean, seriously, I want them to come in there and be like, no, Chris, I want to hear from you. What else can you tell me? And I mean, it's just an honor, to see people and come in there and and even my one of my recent and last managers that I had, they were like, Chris, they were like, even with me being a man and that's them talking, being a manager for 10 years, they were like, Chris, I learned so much from you. And I mean, there's times that people come in ready to go against my head. I'm my right hand of God. That's the left hand. My right hand of God. It's times that people come in ready to go against my head, and they be mad, they be fussing and cussing. And then my manager will come over in 45 minutes. He be like, Chris, they inviting you to their business. Y'all about to meet for dinner. What just happened? They were going off on, and I just be like, I just did me. I
right.
gave them the golden rule and treated them like they want to be treated. And sometimes they're just
Mhm.
mad at the situation and what they got, and they just need that person to say, "Yes, I can help you." And I just try to be that individual. So,
Oh my
mhm.
gosh. Well, you are very good at what you do. Just sharing the wealth of knowledge. We definitely got to have you back. Everybody's just shooting out likes and loves. Make sure you go back and look at some of the comments. They were chiming in.
Sure.
Also. And guys, if you're watching this pre-recorded, feel free to still put your questions in. Chris will go back
Yeah.
days after and still address it. So tell
And
everybody how they
and,
can
and
follow you.
yes, you can follow me by emailing me at christopherbanks757@gmail.com. You can hit me up, in my Facebook. I'm willing to help and everything. And I just want, just because of who I am and everything, I just and I do this in the right manner. You'll understand. I apologize for just going a little bit over, but
Oh,
I don't I mean, I don't apologize for giving good information that's going to really be life changing. We sit
absolutely.
through 2 and 3 hour movies and things that just
Hmm.
is just worthless and isn't going to
Yeah.
cause anything to change. And I've said this to customers. I'll be like, people will sit there and go and pay $600 and $1,000 to see Bruno Mars and Beyonce, and then have a neg or wear Jordans and then have a negative balance of $23 in their account. Something ain't right
Ooh,
with that.
preach,
Don't make me preach to the choir, but I mean
preach.
you need to do things to set yourself up for the
Yes,
future. It
that's so
now,
true.
if you got it like that, it's one thing to go see Beyonce and Bruno Mars, but you might just have to settle for for seeing El DeBarge or just somebody not as expensive until
Take
you
care of
can
your
get to that
business.
point. I
That's
mean,
right.
but
Take care of
just
your
make sure
business.
you prioritize right. Guys,
That's
that's all
right.
I'm saying. And it's nice to treat yourself, but you just don't want to go and do that. Now, I know sometimes now if you do go and do that, you're gonna just have to take away from a lot of the other things. Say, okay, I'm just gonna have to go a year without going to Zumba or whatever your
Right.
choice of hobby is. But yeah, just make the right decision, guys. So again, Dree, I
Absolutely.
honor you. um
Oh,
the social media, I honor you for being here and then listening. Again, I really pray that this has been educational and that it's life changing and that it has not wasted our time, but it will and sink in deeply and really be life changing, for both now as well as the days in your future to come. Thank you.
absolutely. Well, thank you so much, Christopher. Great, great information. You are welcome here anytime. In fact, I'm going to get with you to get you on the book soon. So thank you so
Okay.
much. People are going crazy in the comments and the loves and the likes. So
Bless you,
definitely, definitely, you
everybody.
got to come back. Thank you so much for everything. Okay, sir. And you keep doing
My
what you're doing.
pleasure.
Stay passionate. Stay passionate.
Thank you
And
so much. My pleasure.
thank you. And we'll talk soon. Bye
Sounds
bye.
good. Take care, bye.
Bye bye. Guys, that was awesome. He said it best. It's so true. Even with this podcast, there's people, my numbers are good. I'd like to see them way better, but people would rather go watch some ratchet stuff than hear about their finances, right? So Chris is very good at what he does. I'm definitely going to have him back. And that's what it's all about, informing, letting people know the real skinny, especially about how he talked about how you're discriminated against based on your credit score, based on the fact of if you save or pay your bills. So we got to have him back. So thanks, Christopher. Thanks for coming on. Surely do appreciate you. And we're going to have you back for sure. So, guys, as we close out the show, as I tell you each week, I want to leave you with a positive thought, and man, that I just can't get over all the things that he shared with us, definitely. So this is a quote that basically, I don't know who said it, but it came from the Power of Positivity. And it says, when you see something beautiful in someone, tell them. It may take seconds to say, but for them, it could last a lifetime. So I would like to say to Christopher Banks, you're good at what you do. Keep doing it. Stay passionate and continue to help people. And if you guys have somebody in your lives that that you want to tell them something good about, make sure you tell them. Make sure you tell them and tell them how much you appreciate them. So as we close out the show, just want to tell you guys, do one good thing for one person each day, and you can affect 365 lives, whether it's smiling, opening a door, sharing financial knowledge, whatever. Just do something good each day for one person, and you can affect 365 lives. Stay safe out there, love on one another. And if no one hasn't told you that they love you this week, know that I love you. And with those words, I'm out.